Hey, what's up, guys? Welcome back. So, in the last video, I did a quick 5-minute technical analysis on the security or company called Nutanix, ticker symbol NTNX. I wanted to flip gears real quick and kind of look over at the Q2 2019 investor presentation deck. This is more on the fundamental analysis side, but also, uh, just to give you another perspective on what it looks like besides technical analysis. So jumping into the slide deck here, it is about 32 slides. Just kind of show you like how I analyze it, right? To get like a quick end-to-end type of analysis. So previously we were looking at the charts on the daily. Uh, just to kind of quick refresher, this is a $6 billion market cap company. It is a leader in its space, providing data center related type of solution. In their words, quote unquote, it's called hyperconverged data center technology. Well, let's make sure I was right on that. So company overview, founded in 2009, 4,700 employees, hyperconverged industry leader, leading market share. So this is according to Gartner Report. For those of you who don't know Gartner Report, they're known to be the leading IT consulting firm in the space. So if you analyze a lot of software company, you start to see their name quite a bit. 760 out of global 2000. So 760 customers are from the global 2000, and then 68 are Forbes 100, and a total of 12,000 customers. So very broad, very diversified income stream, or not income, revenue stream, I would say. And then they have a high net promoter score. Wow, 90. I didn't even know that. Average 5 years in a row. So that's pretty good. Recurring revenue model transition, 57% subscription billing mix. Okay. Growing at scale, 1.5 billion LTM total billings. Okay, 1.2 billion there. So what's their mission? Make data center infrastructure and clouds invisible, elevating IT to focus on application and services. So when I think about it, is this a macro trend, a global macro trend? Okay, not global, but a huge macro trend. Yes, because we're in a world today where everyone basically has a mobile phone more than bank accounts, they would say, and therefore more dynamic applications, and thus needing more an evolutionized type of data center solution. So for Q2 2019 highlights, quick highlights, shifts to increasing recurring revenue model, 50% plus year over year. Subscription billing mix, 157 million plus. In other words, 112% year over year subscription revenue. That's not bad. 3.6 year is the average contract length. Not bad. So pretty solid sales, I would say. Q2 for year 2019 highlights. What's the difference here? So, okay, last 12-month financials. So 1.4 billion software and support billings, 1.1 billion in software and support revenue, and 49% driven by strong software revenue growth. Okay, not too bad. So these are some, now it's broken now. So this is the last 12 months recurring revenue model. And then this one's the quarterly. So this is what it looks like on the quarterly. All right. And then 2019 highlights, again, 3,540 new customers year over year. Wow, that's quite a bit. It looks like they might be, I'm guessing their contract sizes vary in different, dollar value. But 562 customers, 105 customers in this range, and then 112 customers over 5 million. So that's exactly what I was saying. So they have quite a bit of customers in the 1 to 3 million range, and then about 112 customers in the 5 million and up type of contract. So when I'm looking at securities, I want to, especially in the software slash hardware world, or mostly software, I kind of want to know what's the average contract size. So this tells me a lot. I like this 96% year over year for 112, I'm sorry, for over 5 million in contract value. That's good stuff. 75% is booking by repeat customers. Okay, so the customer journey. So it looks like this is just a little framework of what they offer, from infrastructure as a service to platform as a service to software as a service. So some of their software, some of their platform software, I'm guessing, and then infrastructure stuff. Okay, not too bad. Now, I might be going a little quick. I do want to just kind of give you a quick overview of what it looks like to go through one of these investor relations presentation decks, because it does give you a decent overview. I mean, not all of them, but some of them give you a pretty good overview of what the company really does, how much they made for the quarter, and then just great insights into the fundamental aspect of a security. Um, So looking over at the Nutanix customer journey. So these are the different products that they were mentioning over here. So enterprise would be more of a platform as a service. Nutanix Essentials is over here. Okay, so it's different layers, and then Nutanix Core. So these are the product offering. Okay, I see what it is now. So if it, I guess if it leans over here, it's mostly a SaaS product, and then if it's over here, it's probably most likely a platform as a service product, and then infrastructure as a service over here. So different product offerings, not too bad. Let's see, AHV adoption as percent of NX code nodes. Okay, I don't look at every single slide and try to figure out, but I try to get as much information as can in a very short period of time. Again, I don't want to, it really depends on how much deep analysis I want to perform. Deeper analysis I want to perform, I might want to size up my position, right? But for this sake, for this quick video, I just want to kind of skim through it and kind of see what I could, what insights I could derive and any information I could share with you guys. So expanding beyond Nutanix Core, percent of deals involving one or more products in essentials slash enterprise, okay? And then Q2 2019 financial results. So looking at it from, let's see, Q2 previous year over year, 37% change, not bad. Software support revenue, 42%. Gross margin improved significantly. This is really good. Operating loss. So this is typical for, I guess you could say this is more of a startup security that's traded in the public markets. Net loss per share translated into shares. Operating cash flow, not bad. Free cash flow, okay. Accounts receivable. Total deferred revenue. Okay. Software and support billing. So this looks to be going up quarter over quarter for year 2019. This is what it looks like so far. Fiscal year. Okay. So year over year, in their terms. So not bad. This is it's quite substantial right here. 54% year over year growth. That's looking really good. Software and support revenue. So software and support billing, software and support revenue, so slightly different. So this one's a lot higher, 375, 297. I wonder if they broke this out above here. Okay, probably not. Looking at the software and support, so 47% year over year, not bad. 62 from 2016 to 2017. Billings and revenue mix. Okay, so this is what I wanted to see. So the revenue mix, basically their portfolio of their business or their sales, right? And looking at total revenue versus total billing. So I want to look at total revenue. It looks like total revenue subscription has been expanding 47%. Wow, not bad. And then non-portable SW over here, and then pro services. So it looks like the bulk of their business is between these two right here. So a little bit of subscription, software model, and non-portable SW. I need to re-look at that and see what we're talking about on that. But nice to see what their revenue mix looks like, and also nice to see that it's expanding to the upside. Growing deferred revenue. Okay, short-term, long-term deferred. Not bad again. So I like this nice, consistent high growth right here. So this would almost be categorized as a growth security. Remember, this security is currently around 6 billion in market cap. Typically for enterprises, it's relatively small, and they're already in the billion-dollar sales. So my interpretation is that this pullback in the recent past few trading days is pretty eventful and something that I might want to take a look at and see if we could spot any support around the 30 area to maybe consider a starter position just because I like where the product offering to the enterprise market, their solution, their gross margin is pretty good. Let's look at it. So quarter over quarter, it looks like it's been kind of in a decline, but that's okay. But year over year, they consistently hold 60% and up. Typically for software, 70% up is pretty normal for gross margin. For this one, I think it's a hybrid of like software hardware, so that explains below 70% gross margin. Operating cash flow generation. So again, going back to this, I really like this. This is really good in terms of all the businesses or stocks that I look at out there on a fundamental basis. Operating cash flow generation. Okay, year over year, 4, 15, 93, 8%. Okay. Not bad. Rule of 40 operating framework, trailing four-quarter rule of 40 score. Okay, I'm not too sure what this means. Again, not every slide is something that you're going to understand, but you want to kind of get the gist of the company, right? The gross margins, the revenue, the quarter-over-quarter performance, etc. Customer growth and momentum. So I like this a lot. Looking at their different contract sizes earlier. This is from a collective look at all their customers and different contract ranges from $1 million and below contract, or 1 to 3 million if that's what I said earlier, and then the 5 million and up type of contracts. So this is good to see that more enterprises are adopting their technology. Global 2000 growth momentum. So this is just the net customer growth. Now this is the global 2000. So the 2000 biggest companies around the world and their adoption. So this is actually growing. I like that because if it's global 2000 income or sales that they're getting, it's very robust type of revenue. And so this tells me that this company has a strong or a bright future. Large deal momentum. So not as hot as 2018, it looks like number of software and support deals above 500K. So 2019, first half of 2019 doesn't look as good. Well, it is only the first half, so I let's wait until the end of the year. So this might be actually, if you're talking first half, when we're only done with first quarter, we're moving on to second quarter. This is actually looking pretty good. Transition to a recurring revenue model. Okay, so this is their forecast right here in 3 to 5 quarters. Not bad. Average subscription contract duration, again, 3.6 years, consistent with over years. As a matter of fact, it looks like it's been expanding slightly since 2017. And then continued investment in talent for growth. G&A, research and development. How much are you putting into R&D? Quite a bit. Support and services, and sales and marketing. So I like this. They're ramping. They're this tells me that they're pushing for growth here. Culture that drives our growth. So little details about their culture, what it looks like on the inside, right? I love a company with a good mission, vision statement, but also a robust value system. And this is what I see. New reporting model. Let's see, what's this? Product type, subscription, term, 1 to 5 years, revenue recognized. Okay. And yeah, that's pretty much it. Moving down to the appendix, you get a little bit more precise details in terms of the fundamental numbers, but that might take a little bit more time, and I also don't want to bore you guys. So, in a nutshell, guys, that was a quick analysis of Nutanix Investor Relations presentation deck. It's about 32 slides, but it gives you a great overview of the company's fundamentals and a little insight into their valuations and financials. So as always, I hope you guys enjoy and hope to see you next time. Thanks so much.